Hello traders, this is Blake Morrow and you are listening to the week ahead video for March 21st, 2021. I hope you guys and gals are having a great weekend. And before I get started, let me just mention this. If you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. $1 for 10 days. So try us out. Even if you decide at the end of your trial, I don't want to really use the premium version because I didn't want the chat room, or I don't need the advanced analysis, but you still want the app and you want the analysis and you want the private webinars that we do for the ForexAnalytix customers, and you're like, well, I'm just going to go with the light version. Well, you get to try out the premium version for the next 10 days. And so don't forget to download the app on the Google Play Store and the Apple iTunes Store. I just wanted to mention that. Also, if you are watching this video on YouTube and you've been watching us for a while and you're like, man, I get a lot out of these videos each and every week. They've been doing them for years and years and I love them. Great, give us a thumbs up because it helps us out a lot. It helps our YouTube algorithm. It makes me feel good. And, ultimately, that's the most important thing. No, I'm joking about that. But it really does make our team feel good because we produce these over the weekend and we just hope you enjoy them. So give us a thumbs up. Make sure you share the video. If you see us on, LinkedIn, or you see us on, Twitter, some social media platform, and also subscribe to the channel. Because if you subscribe to the channel, you won't miss any of our videos that we produce all week long. And, just so you guys know, I know a lot of you don't know this, or a lot of you do know this, excuse me. We produce a lot of webinars throughout the course of the week. We have Spanish webinars. We have webinars in the, doesn't matter when you're sleeping. We've got some there because we produce them all over the place. But you can see we have videos that are going up all the time. So make sure you subscribe to our channel so you don't miss any of them. And you can click the bell icon and it'll give you an alarm when we produce a new video. All right, anyway, enough about that stuff. Let's talk about what happened this last week. This last week was obviously a big week. We had the FOMC rate decision. At the end of the week, we had the SLR, that was the supplementary leverage ratio, the SLR, not get extended, and that's a big deal. And we're going to talk about that in a little bit. So there's a lot that happened this week, and there was a lot of movement. Now, there's obviously, going into this next week, there's going to be important events that we're going to, obviously talk about as well. And I'll get to that here in just a second. But what's most important is kind of what had happened. And that's why, I'm going to actually look through some of these charts that we're going through. And actually, I was going to do something kind of special to you. Or special to you. What am I going to do special to you? No, I'm going to do something special for you. You have to understand, it is early in the morning on Saturday morning. I'm filming this because my son's playing a soccer tournament all weekend, so I had to get this done for you. So I'm doing it before anybody else gets up so I can get this produced and out the door. But I wanted to actually take a look at a lot of these charts on a weekly and daily basis with fresh eyes, meaning no technical analysis drawn on them aside from our basic moving averages, the 200 period, 50 period, and then we also keep a 48 EMA on there as well. But I'm not going to talk about any of those. I'm just going to do some basic analysis for you guys with a fresh set of eyes on the markets as I'm talking through what had happened this last week and what's going to happen this following week. So, I think let's take a step back for a moment and, this is a weekly chart of the S&P. And I want to talk about what had happened this week. This last week we had the Fed meet, and, it's interesting. The Fed governor, Powell, he was asked about the SLR exemption and if it was going to be extended or not. And he's like, I'll have an announcement on that in a few days. but let's not focus on that. Let's focus on the fact that I'm extremely dovish right now, and I just upgraded our GDP numbers ridiculously high. Let's forget about that because I'm really actually dovish. Don't bother with what I'm doing here. Look at what they call that, the kabuki theater. A lot of jokes have been flying around that this week. Don't look over here, look at this, look at and that's exactly what the Fed governor did. He it's interesting when you watch his press conference, when he was just reading like verbatim what he knew he had to say. He had to get it out verbatim, and when it shouldn't have come to much of a surprise when they didn't extend the exemption for the SLR this week or on Friday. When that came out on Friday, I actually expected a little bit bigger move, but the market had already been dropping going into, this is a 4-hour chart on the S&P, it had already been dropping going into Friday, and so we just kind of bounced around a little bit. But the important thing is this exemption not being extended is likely to keep bond yields stronger moving forward. Now, I look at bonds, and I'm going to take a look at yields really quick. And this is a chart that, if you guys listen to the daily, webinars, you're very familiar with this chart. We've been watching this chart very carefully, and talking about the importance of this resistance that we're coming up to, which is a 50% retracement in yields, which is about 180 on the 10-year, and 30-year we've been watching very carefully too at the 618 retracement, which is both very important. And you can see on relative strength, we're very overbought. We're probably at the upper end of a channel here in the 10-year. Do I think that yields are going to just continue to rip higher? No, I don't think so. But I do think that this not extending the exemption for the SLR is going to force some of the institutional money to sell some of their treasuries. And that's going to keep yields supported. And as yields stay supported, that's probably one of the things that's going to weigh on equity markets moving forward. I have to point out, and wait, before I go here, if yields continue to rally, and especially if inflation expectations continue to rise, yields will stay supported, if not go higher. And that is probably going to be one of the catalysts that continues to drive the dollar index higher in the near and immediate term. And I know if you guys are trading the dollar, where'd my dollar index go? There it is. Okay, so here's the dollar index, and I'm just going to give you a brief view of this chart. We have a flag pattern. This is a daily chart here, and we got a flag pattern that plays out higher, and it should play out to about 95 if we continue to break. And 9250 is a key level of resistance that I'm looking at for the dollar index. Oops, that's not what I want to do. Let me grab the wrong thing. There we go. We should play out towards 95. And if you look at the spike low, this is post-COVID lockdown spike low. That comes in at 94.50, 94.60, and if the bull flag pattern plays out counter trend, it should take us about there. So that's important to realize, and I have to point out that I do not think the dollar is bullish. I mean, it is bullish near term, but I think most of us are looking for opportunities to sell the dollar at a higher price. So how do we express that in euro terms, like when the euro is coming down? Well, again, here's a fresh set of eyes looking at the euro dollar, and this is a daily chart. You'll notice that this line right here, this is the 200-day moving average. You guys see that, right? It's the 200-day moving average. Now, one of the things that some of you might be looking at as far as the euro goes, you might say, oh, well, that's the dollar index in reverse or in inverse. It is. So if the euro continues to play lower, we're talking about trading down towards 115, 116. Now, if you think about that, just think about I know CFTC data came out over the weekend, and it was, and we have seen a reduction of euro longs or US dollar shorts, but it's still pretty, lopsided with dollar longs and euro longs, dollar shorts. So I wouldn't be surprised to see the euro dollar play out this bear flag pattern in the weeks ahead and plow through some of the support right here and get everybody who's long out, and allows us that are waiting for a dollar dip to play it on the long, or a euro dip or a dollar rally to play it back on the long side. Now, that doesn't mean that this is going to happen. This is kind of, I try to plan, especially longer term, things. I try to plan for things to happen. That doesn't necessarily mean they're going to happen the way that I imagine, but I sure do feel more confident in my trading when I plan something out and the market does move as I planned. For those of you that listen to me on a daily basis through our webinars, I tend to be pretty good at, figuring out what the FX market's going to be doing over the next, few weeks to a month. How you trade it's a completely different ball game, but trying to identify what the trend or the theme is moving forward. To have the dollar move down and move it down, the euro move down, from a position standpoint, and take out, some of these support levels, even if we just make it to the 38% retracement to the 117 level before we get a significant bounce, that's possible as well. But to play out the entire technical pattern here would take us below 116. It would stop out a lot of long-term euro longs. And also keep this in mind, that the top trade of 2021 from most bank analysts was to be long euros and short dollars. That was it. And I know we've talked about this quite extensively on our daily webinars over the course of the last several months. But, December, when I was reading 2021 forecasts from every bank, everybody was, short dollars, and, the euro's going to 130, and that was the trade of 2021. Well, as you can see, things have changed a little bit, moving into the first quarter of 2021, going into the second quarter. So now I'm going to bring up a couple other charts too. Let's say that we will get yields continuing to rise. Well, that's when you have to look at the dollar yen. And, let's take a look at a weekly chart in the dollar yen and realize that, we're pushing right now a multi-year resistance. Okay. This is 2015. This is 2020. That's last week. And as you can see, we're pushing a major level of resistance. Now, near term, as I explained to you guys, I wouldn't be surprised to see yields, consolidate, but I think overall they're going higher. So if you take the 10-year yield, which, by the way, the 10-year yield and the US dollar Japanese yen have been and are one of the strongest correlated, intermarket analysis type of correlations you're going to find, is the US dollar Japanese yen and, US 10-year yields, 30-year yields. They tend to be very, very, very strongly correlated. So everybody knows that the SLR is a supplementary leverage ratio is now it's not going to be extended in those exemptions. So maybe that's one of the reasons why yields had been going up in the first place. So maybe we like consolidate a little bit. We in the 10-year, we see the 10-year come back towards 155, 160, something like this, right? And if the 10-year yield actually pulls back a little bit, that means that the dollar yen may pull back from this multi-year trend line, or something we talked about last week. If you guys don't recall this is the euro yen, and that's a 13-year trend line in the euro yen. Notice that we hit it, we probed above it. By the way, I was short and I got squeezed out for a loss right there because I'm like, yeah, that was post FOMC day. I'm like, just in case, I don't want it to scream up to 132 while I'm in it, but I actually reshorted it, so it's fine. But notice this is a major multi-year trend line. If you're talking about the euro and possibly being weak, and then you look at the dollar yen, it's up against resistance, then the euro yen could be up against a key technical level, and we are huge technical resistance, right? Huge technical resistance. And so if we next week, like let's say next week, we drop a little bit in the euro yen, we drop back below, let's say, I don't know, 28.50, back below the 618 retracement. Then if you take out this this ascending trend line, next thing you know, you're trading back at 125. Now, I think let's just talk about this a little bit further, really quick. We talk about yields and breaking out. I think that the euro yen will eventually break out as well, but that doesn't mean that near term we can't get a rejection of this really key trend line, come down a little bit, and eventually, have a little bit of a pullback and eventually a breakout higher. Yeah, I think that's entirely possible. It's hard to tell because trying to figure out what's going to happen a week or two, or a month or two in advance is difficult, because trying to figure out what's going to happen 2 minutes from now when you're trading intraday is tough enough. So trying to forecast what's going to happen weeks and months in advance, I'm not a fortune teller, so that's going to be a little bit more difficult, but I think it's possible, especially technically we see some of these things come to fruition. Now, I'm going to talk about one last thing before I leave with you guys. I want to talk about crude oil. And crude oil, obviously, we've been just screaming higher since the post-COVID lockdown, when crude went negative on the front month contract, way back here in April. Some of you guys remember it was like negative 40, 50, I forget what it was. I even have pictures of when it was trading negative. That day, I still keep them on I keep them in my folders file. But anyway, crude has rallied back sharply, and what we've seen this last week, which I think was really important, is we've seen a break of a ascending trend line, a false breakout above resistance. This is the 2019 highs. This is last week, and if you listen to our daily webinars, and by the way, if you're listening to the daily webinars and you don't know what the link is, it's in the description here, but of this video. So just look down in the description, you'll find the link to our daily F.A.C.E webinars. So make sure you register for those. We had this false breakout in crude and a reversal below this trend line. Now that we're below this ascending trend line, that's when you have to start focusing on, currencies that have been building a base that are crude sensitive, like the US dollar, Norwegian Krona. So keep an eye on US dollar Norway, guys, because if crude comes down and silver starts to come down, or crude starts to come down and stocks start to come down a little bit, The US dollar Norwegian Krona is, I think, in my opinion, it's at risk of breaking higher, meaning, weaker Norwegian currency, stronger US dollar, as we have weaker crude oil and stocks that are probably going to consolidate. Well, I guess one last thing I should say about the equity markets, we continue to see this rotation from out of the Nasdaq stocks. You can see the Nasdaq is underperforming, and the Dow just hit all-time highs this week, and the S&P is still holding up pretty well. But I want to show you something. Let's go to this weekly chart, and here's the S&P. This is probably one of the things that you need to pay closest attention to if you're trading equities. First of all, you guys know that the Nasdaq's weak, but the S&P hit a new high, and that's a false breakout. The Dow, that's a shooting star. That's a shooting star candle, which is a reversal candle. Okay. So you got a false breakout on the S&P. You got the Dow that gave us a shooting star. You have the Nasdaq that's already weak as it is, and it's already underperforming. So be careful. We have seen rotation in equities as of late. Sell Nasdaq, buy the Dow, or Dow's come down quite a bit. Okay, the Dow stabilizes. Let's buy some Nasdaq. We've seen it's a lot of rotation, but as long as yields continue to stay where they're at, and especially if they start moving up again, there's a chance that we're going to start to see broad-based selling and not so much this rotation that we've seen as of late. Okay, so guys and gals, I want to say thank you so much for your support. And it really means so much to myself and the rest of the team. If you like this video, if you're watching us on YouTube, we really appreciate it. And I just want to say thanks for listening in. Thanks for taking your time away, this weekend and spending some time watching this video that we've produced for you. Have a great remainder of your weekend. I will catch you on Monday morning on the F.A.C.E webinar. And my name is Blake Morrow with ForexAnalytix. I'll talk to you soon.